right. A very good morning, everyone. I hope you guys are doing amazing. I hope you had a nice Halloween weekend. For those of you that celebrate Halloween, for those of us that are not very bougie, of course, we had to sit it out and have a normal weekend. Other than that, I would hope you guys are ready for this week's market edition. I'm just giving a minute or two for a few of our peers to join into the session. Then we can look at what the markets do have for us this week. Once again, I would like to remind you guys that it's a brand new month. It's the first trading day of November. So I hope you guys are ready to end the year in style. I hope you have your accounts ready as well. If you don't have an FXPesa account, we are running the Karibu bonus, and you wouldn't want to miss out on that advantage. And yeah, you can take up your Karibu bonus with your first deposit on FXPesa as well. So feel free to share the session with a few of your peers, and then we can kickstart in about a minute. I'm also doing the sharing, so yeah, so that you can have a nice, good community as well, right? Yeah. So just a second, I do a few shares here, there, and everywhere else. Then we can kickstart our session. Other than that, I would like to remind you, and this is a risk disclaimer. This is not trading advice. It's not financial advice. But you can feel free to always take up confirmations upon all trade ideas given out and do your due diligence before you take up any trade ideas. So yeah, so as usual, we do like starting with what would be the possible movers for the markets within every new week. And of course, we like going down to our calendar. So usually I like using the trading economics calendar. As you can see here, it's much more simplified for me when I'm going to use this. But as well, we do have a much more detailed calendar that you can access on your FXPesa account. So today, Monday, we did have a news coming in from China. That was about 4:45 a.m. East African time. Then we do have the ISM manufacturing PMI coming in later at 6 p.m. And the previous was 49.1. The consensus is 49.2, and then the forecast is 49.5. So 49.5 shows a recovering economy, which becomes positive for the dollar. Remember, we like having the PMI from 50 to 52.5, but not beyond that because that triggers inflation. And when it goes below 50, we don't like having it below 47.5 because that now starts signaling in deflation. So that is something that you really need to pay attention to when it comes to such news events. So a PMI, the manufacturing PMI is very, very important because what sets precedent for what this month's CPI figures will most definitely look like. So you might want to be very careful with the figures that come out. Shall expect some volatility. It tends to be volatile, though I don't really advise trading news events, especially when we are having things like the market shutdown or certain kinds of uncertainties. For example, we did see Powell cut the rates by 25 basis points, but he went ahead to caution that we may most likely not have the third much anticipated rate cut. And as a result of that's just statement he made last week during the Fed rate interest decision, we saw investors going back to risk on. By risk on, they are now going into riskier assets like currency bonds and investing more in currencies. So you saw them withdrawing their money or taking out profits from safe haven currencies like gold. That's why we are seeing that sell-off on gold that continued going on after that. So just a second. So I'm just sharing to the last group. My apologies. All right, so as I was mentioning, that's one of the ways that the market tends to get influenced a lot by the rate decisions and some of these key news events. So as I was saying, we have a much more detailed calendar you can access when you create your FXPesa account or you log into your FXPesa account, or equity for the PO in Uganda and Tanzania. So when you log in, just come on your left-hand side down to the analysis section. There is a lot of tools. You can even do a whole market breakdown using the research terminal, but I'm going to focus more on the calendar. It gives you both the earnings reports and the news we expect to come into the financial markets directly as well. So when you come to Monday, we still don't have a lot of news coming in. It's just basically the ISM manufacturing PMI, and then there will be some bit of ideas that are given out and what trades on the signal center are actually holding trades based on what news will be coming in later on that day there. So this will be the ISM manufacturing PMI, and they're saying purchasers index on a monthly basis, the leading indicator gauging business activity in the US and the US manufacturing sector. The indicator is obtained from a survey of manufacturing supply executives based on information they have collected within their respective organizations, survey responses, and all this. So it's just basically coming in from the business ideas, or they come in from the manufacturing sector, because that's what sets course for how prices will be affected during that as well. Then there will be some trade ideas, of course, in regards to the pairs affected. As you've seen down there, there was a currency pair highlighted, that was USD JPY, which means we tend to have a live trade from our signal center as well. On top of that, I don't really have any big news events coming in from our bar chart. We just have basically something affecting the stock markets. Apple's free cash flow surge is implying Apple stock could be 20% too cheap. Then what commodities looks based in the holiday season. For guys looking into commodities, it's a very nice article you can look into. Okay, so it's nothing much. We can just see a few major factors. We have the S&P 500 E-mini up 1.25% points today. The Nasdaq E-mini is up at 24 points as of today's market open as well. For the guys who are a lot into this, these are majorly changes within the day and then year to date as well. So there's no any other big news events coming out from there, but do have a headline from here. Trump says he won't attend the Supreme Court on tariffs. Now, we know that tariffs have been a very big major market mover this year. And as a result, we have seen pairs like gold give us a 9-month non-stop bull run, right? And I hope you guys have been taking advantage of that, because we have been here every single week trying to break down and seeing how best we could capture in some opportunities coming in from that side as well. So let me just get my chart in a bit, and then we can kickstart with our market overview and analysis, right? So just a second, I share my MT5 screen. So it's a brand new month, and one of the things you can always do with a new month is start from a relatively high time frames. For example, the monthly charts can give you a very big picture on where the chart is going. So this has been some of our analysis coming into this month. From last week, anticipated take out this high, price closed above, give us a retracement, and it's been hovering around this support level here. But let me just get rid of that. Then we can have this since a brand new month. We bring it from all the way up. So I'm given a monthly chart. It's going to be bullish, of course. I expect some push down and a push to the upside. So I'm going to rely on the weekly time frame. We do see the weekly time frame also gave us a breakout at this point here. Are now longing to form a higher high. But before we go to that, we can now start looking at our low time frames. What are they giving us? What structures are being formed that could either continue this push to the upside or give us a possible correction move to the downside? So right now we have this high the price had formed, acting as our most recent drawn liquidity. From last week, we did see price take out that high as anticipated and retest the breakout area. For the guys that have been to some of our classes, I've spoken about these kinds of structure where price breaks out and respects the breakout area. I like calling this a pure bullish market condition, because price is just breaking out and retesting the breakout area. So this is a 4-hour time frame going into intraday outlook for how gold would look, how the dollar index would look like today. We would anticipate we're seeing a very big push to the upside going into the New York London Open. So anticipate that if price closes above, we can expect a retracement going into the probably pre-New York Open. Then we can try to continue this to the upside. In case that doesn't happen and price breaks below this 4-hour lows here formed, by a break below, I always prefer a candlestick closure below these lows. We can expect a deeper retracement all the way into this zone. This zone is still a bullish zone, and it's still a very valid bullish zone, because price had only respected the breakout zone, right? So within this, we can look for our 30-minute zones of or areas of interest where price could most likely retrace to. So when I come onto lower time frames, I can just try and break down my rectangle tool a little bit to around this breakout area. This would be that nice demand area. I would love price to come below. So right now you see price in between our range. So the goal is that if price closes above this range, we can anticipate a retracement and probably look for this continuation to the upside, probably heading into the New York session or the pre-New York session. Then of course, if it goes below, we would like to see a push all the way to cover up this imbalance into these demand areas where you can look for some kind of bullish confirmations to pull up and try to push price to the upside from that area there. So anything below that, I don't see any fresh demand levels below this. It would mean price would be leaning lower because you have another 4-hour zone that's way down this side here. So price can be leaning lower into that because in the 30-minute, I don't see any valid demand or order block levels are in between here that are really, really valid. Most of them have been consumed and some have consumed themselves or mitigated themselves as well. So that's something we'd like to watch out for on the dollar index. Now, the dollar index just gives us an overview of where I would like dollar-related pairs to probably give us a bias or lean towards during the day's price action. So having seen this, we can now break down to a few of those currencies. And I love starting, of course, with Euro USD. It's one of the most correlated pairs when it comes to the dollar index, right? It's one of the most correlated pairs. So coming in from a monthly, we saw a solid monthly candle to the downside, as you can see over here, strong bearish monthly candle. And the month before gave us this long wick rejection that had taken out these highs, right? I think potent to call it a liquidity sweep. So with a liquidity sweep is basically a failure of price to form a new structure. So what price tends to go to lower areas to pick up either more liquidity or even change direction based on that. So the lowest area you can see from here that may be significant will be taking out these lows to give us some kind of more bearish precedent and going into the next area of interest on the monthly time frame. But that's months away. So right now you can focus more on this month's price action. So one of the things you like knowing is that when a new candle forms, one of the first anticipations that price may go a bit higher within the first week, usually, before it goes lower. That's if the next candle is meant to be bearish. So we're going to use the lower time frames to try and pick up what areas price could want to use to continue this bearish move on this. Now, the bearish move on Euro USD basically means we are seeing more strength on the dollar index, right? So for the guys who are in for last week's analysis, we did speak about price eventually coming to break this low here. It had given us a slight retracement coming in from this demand, and we had spoken about this push up to come and take out these lows, and we have seen price take out these lows. So having taken out those lows and closed below them, what we want to look at is what's the next target area that price could possibly go to. Even if the idea would be for price to go lower, for even low below this point, but this is the next area of interest that could probably gauge up some kind of bullish momentum. So it's an area you want to watch out for before you start thinking of bulls in this area, because when a daily time frame, you want to first use as a drawn liquidity or as a target area. So as price is coming to break below this area here, it did leave us this retracement area here. And in that retracement, you said price had a very nice correction move. Showed you a clear loss of momentum in the bulls. You're seeing very small candles, multiple candles, about 1, 2, 3, 4, 5 days, pretty much a whole week for price to end that retracement, and 2 days to take out the whole of that movement, showing you how strong the sellers are in this market. Now, this is the area we're targeting to. So you can now capitalize on low time frames to see what best possible areas price could definitely want to use to continue that push to the downside. So I usually like having at least 2 demand zones to the upside that could probably push price lower. Now it's a 4-hour time frame. So I'm going to mark this zone here above. Then I'm going to mark the most recent possible zone, because this most recent possible zone is the area that's responsible for this breakout here. So usually before price takes a breakout of old lows, and in this case they're all daily lows or all daily lows, that means price needs quite a big amount of liquidity to push lower into those areas or to break out of that particular structure it would be in. So now we have 2 supply zones above, but that becomes what they call structural bias. Now with structural bias, I'll be leaning on the idea that price may most probably retrace back into those zones. Then I can use low time frame confirmations to take up my sell ideas. Then there is something called conditional bias. Conditional bias is that price, it's not a must for price to come back to your structures. If the bearish momentum is really so strong, price can just give you a continuation from wherever it is. So when I look at the possible area that price may give me a continuation from, or my conditional bias, it's going to be this consolidation. Now, if you remember quite well, in the previous dollar index analysis, we saw a consolidation to the upside. This time we are seeing one to the downside, meaning they are correlating quite nicely. And of course, they're inversely correlated. If the DXY is buying, we want this to be selling. So right now we have this range here. These are 4 hours. So we'd like to see a breakout to the downside and then a push back into this area and probably use this area to go to the downside. And it will be very nice, of course, to always take a confirmation. You can always refine those supply zones to a 30-minute time frame. You can see the land has given us some strong bears coming in, or you can call them bulls for the dollar, but then strong bears on this pair here. And this is the range we are in. So what we would love to see is a closure below these lows and then a push back up into a supply level. Right now, price has formed a very nice supply level. It does carry an imbalance, and it also does offer us some breakouts of our previous lows. But we want to see a closure below this low here as a definite structural confirmation that price wants to go lower, and that will be this area here, bring out of this consolidation. So pretty much has been a consolidation from around here all across to where price currently is, and it's trying to pick up some momentum to go below. And of course, if price comes down, it can even sweep this and fail to close below it. You can easily anticipate a deeper retracement to the upside. Probably that area didn't have enough liquidity yet in case price fails to close below that low. And you'll see our price coming back. We can refine this area all the way up here, and that would be the area I would want to watch out for as our next level in case this one fails to offer as a confirmation. Now, right now, we can see we're in a 30-minute time frame, which means you can pick up confirmations from the 5 and then the 3-minute time frame as far as Euro USD is concerned. The one thing you want to be sure of is that price is giving you confirmations inside these higher time frame areas of interest or supply zones that we are having. So that's something we want to watch out for as far as Euro USD is. And in the meantime, I'd like to send a special shout out to Boaz Oyaru and Wild Boss and Odiwa Opar for probably being the first spot to tune in, and of course bring up that engagement in the comment section. So guys, feel free to engage in the comment section. If you do have a few currency pairs you'd want me to watch out for or try and break down as well, you can feel free to put them in the comment section. If you have a question market related, you can feel free as well to drop it down in the comment section. And if you're interested in learning more about trading, you can use the link in bio in the description to sign up for our different classes. We do offer both physical classes in Uganda and Tanzania, and then online classes for both beginners and intermediate or advanced traders as well. So this is what you're looking at on Euro USD. So we can now move on probably to GPUSD. The reason I like doing the analysis between both Euro USD and GPUSD is because sometimes they both correlate to the dollar index, but their structures can tend to differ a little bit. You may find one of the pairs having a very clean structure, and then another pair that's correlated with it having a different or a slightly different structure as well. And that's why I like having all these 3 pairs in my analysis as well. So we can now come down to Euro USD. You can see the bearish momentum is still cutting across, right? Similarly to a Euro USD, on the monthly price, taking out a high to form a higher high, but currently you can see now price is pushing to the downside. Now here you're going to realize that price has already swept the previous, the older monthly low. You can see price has taken out already an old monthly low, which was this low right over here, right? It's an old monthly low, which makes it a bit significant. Sometimes I've had theories where people just anticipate that price must retrace after taking out a lower high of an older candle. It's not quite a must, but yeah, it also counts based on structure, right? So when you look above here, this time price didn't take out a sweep of this, but it did form what they call a fractal high. That means you have this bullish candle, then this bearish candle with a longer wick, and then now price pushes to the downside. I think some guys call this the morning star. I think it's the morning star when guys do chart patterns, right? It's the morning star. So right now you can see that price didn't close below this area here on Friday, but data has given us a gap down to the downside and leaning to the bearish side. And this is a monthly overview. So based on a monthly overview, and we're just reading things like candlestick anatomy or pure price action, would anticipate the next candle based on the momentum on this previous monthly candle here. We can anticipate that the next month is pretty much going to be bearish unless otherwise. So of course, when it's bearish, it means that dollar is regaining, and it has been doing exactly so for the past few weeks, if not the past 2 months as well. So now you can come down to the daily time frame and start picking up what zones, if price is to retrace, what zones would it retrace to, and then if you continue to the downside, what condition should we look for in terms of price action? what structures should price form to give us a continuation without pretty much going to the upside. When I come down to this, the level that I will be targeting is going to be this last bearish candle here. It's not pretty much an order block, but on just market cost up took out these levels below here. And for the guys who are familiar with things like the accumulation, manipulation, and distribution theories, you can realize that in this case, what price did before forming this low was quite a bit of consolidation, and this time it swept both to the upside and to the downside before it went to the upside. So for making this a strong low. So I would like to mark it out as still my target, similarly to your USD. Though Euro USD we had a whole zone that was there on a low time frame where I could easily target. So coming into this, with this at price did come from a low, high, lower low, came and tried to give us a deep retracement above these highs, but later on began giving us those lower lows, lower highs, lower lows, lower high, lower low, lower high, and now just taken out this previous and older daily low as well, leaving us a structure here. So when you notice this on a daily time frame, we do have some supply zones, but you're going to notice that these supply zones are very, very far right, and sometimes price won't necessarily retrace all the way to these levels here. Now, this is where the correlation becomes very, very important. Someone may come on GPUSD because it's correlated it with a dollar index, and yet here it has a bigger range to the upside to come to the area of interest here, or the supply level, while on the DXY and Euro USD it has shorter distances. So you find that the other two pairs have reached their areas earlier than GPUSD, and in turn, what happens? You'll find these pairs ending somewhere in between and then continuing to the downside. But the fact that the ultimate goal here would still be price retracing higher before it goes lower, then I can look for lower time frame zones that are in between these zone areas here, where I can now start looking for a selling opportunity. So the first one I would like to mark out is going to be this zone particularly. So it's an area of interest. That means when price gets to which you really want to fancy having a low time frame confirmation. So we shall refine it later to a 30-minute time frame. And then our second supply zone is going to be this particular one here. This particular one over here. Why I would take it as my supply zone at this point in case, because they have this long wick here, is because price actually closed below that long wick. And when price closes below the long wick, it basically just gives me what they call a structural confirmation. So coming into what you are seeing here, you're going to realize that the structure on GPUSD is slightly different from what we have on Euro USD. And of course, when you correlate it with the DXY, slightly different in that you don't have that strong consolidation that was being formed on the 4 candle around these zones. But what we have here is that price came and gave us a breakout to the downside, giving us a lower low, giving us this retracement, and right now it's looking for ways of pushing lower. So we're going to refine that onto lower time frames to get our conditional bias. Our structural bias is built on these two supply zones above. The beauty with this, as I've told you earlier on, is that price gets to these zones and you're able to capitalize on low time frame confirmations to actually take up these trade opportunities here, or the best possible trade opportunities. And sometimes if you then give those confirmations, you can be able to stay out of disaster or catastrophe in case the area is not valid. Remember, we are not market makers, we are retail traders. So what you can only work with is what the chart offers us, not what we feel we want the chart offers us. That's something very, very important. If you're going to be wanting to do day trading, you know that you trade what the chart gives you, not what you think the chart is supposed to do. So you try to eliminate the whole ideology of being predictive, and you lean towards being more fluid with the market. When the market gives you conditions for bears, you're able to look for the best possible bearish opportunities based off confirmations, based off structure, based off sentiment. If it gives you the bullish, you do the opposite of that as well. You look for the opportunities based off sentiment, structures, and confirmations, as long as you've picked up that general ideology. So going down to the 30-minute time frame, we can tend to refine these zones. So this was the zone we had above here. Realize that the only zone we have here right now is this supply zone. If we're refined from there, when you come to this, we have a few zones above. We have this, we have about 3 zones. But I'm going to want to first focus. There was this zone responsible for the breakout. So one where I would like to pay my most attention. So you see price tried to come towards it, didn't quite get to it. Then of course, even the one above here will still be valid because they're in close proximity. So let's just have both of them there. So when price gets back into this area here, you're able to look for probably 5 or 3 minute confirmations from that basic from that zone as it is, or even this zone, whichever price decides to offer you confirmations within is the one you would want to look for trading opportunities. But look at what price is doing. Remember, we didn't have this consolidation to the downside. But what we have is that we had price came and formed a lower low, and right now it's pushing to the downside. So what we'd love to see is that this demand level will be our target area for this push to the downside. So I'd want to say a retracement probably in a 5-minute time frame or 3-minute time frame into probably this supply zone, and see if it can push me to this demand level here as my target for that bear. All today's are bears. So this as far as GPUSD is concerned. But of course, we're leaning towards the more bearish bias, which means you may not expect this price area to hold price a lot. For now, it will act as an obstacle or an area of interest where buyers could easily want to take advantage and put in some buying orders. So that's as far as GBP and EURUSD is concerned. So you can move on onto something a little bit different. So let's go a bit into gold. The people's pair, the pair that probably almost everyone loves the most. I don't know about you guys, but yeah. So this is what our gold is looking like. So I'm going to just get a second gold chart before I come back to this. I do have some levels on this that I may not love to tamper with. I love keeping them on. Right, so let's have this. All right, so this is now our gold. So as you can see, we did see gold give us this push to the upside, then this long wick rejection. And as you can see that the rejection is way bigger compared to the candlestick body or the bullish candlestick body, meaning that I don't want to call them bears because of how gold is traded generally on a global scale. This more profit taking for investors to go into more riskier assets, but you can see that it's leaning now towards a lot towards the bearish side. But I don't really feel like we're ready for the bears yet because there's still a lot of uncertainty. But you can see that there are some zones below that in the long term, price can most definitely want to target, which is all the way this zone here. You can see this breakout here. It has that whole zone, but this is a weekly time frame, and these were a handful of weeks that you may want to wait for. So for now, we're going to focus more on the most recent price action. So as you can see here, there was a demand level here. The price is about to come to respect for a short period of time, but then more buyers came in, of course, leaning more towards when we were coming towards the whole red decision. We saw this pair getting a bit more bearish before it now started giving us this push back up to the upside. So on the push to the upside, you can see we have this area here. That's a nice supply level. And from last week, I've been mentioning we needed price to break above this supply zone in order for us to now pick up a continuation on the bulls. For this period, anticipate more bulls are on gold partially. Of course, we'd have a target of the supply zone or the extreme supply zone. But for now, we're going to just focus more on the conditional bias based on the areas here. When you look slightly below this, we can find a whole demand zone here that price did retest coming in from last week. And so one probably pushing, giving us this push to the upside. Other bulls that we are seeing on our gold at the moment. So with this area in mind, I can now go down to my 4-hour time frame because then it will give me a bit more price action to actually work around with. So when you look at this, gold is trying to give us a correctional move all the way to the supply level here. As you can see, we have the supply level here. It's a big zone, well and good. But remember, these are zones where you're going to look for low time frame confirmations, which means that as you go into top-down analysis to refine the entries, the confirmations, the risk keeps reducing significantly. The most important thing with these zones is to know what area is highest probability and what areas does price tend to change direction from. Now, just like you've seen this push back up to the upside, you've seen this current push we are in. It comes from this high time frame, supply and demand as zones as well. So that's why it's always easier, even on gold. When price gets into your zone, you may prefer or may fancy waiting for a low time frame confirmation because then it will give you a bit more edge and a bit more confidence in taking the opportunities you're looking at on those particular pairs, especially volatile pairs like gold. So right now what we can see is this type of correction, probably trying to target this supply level here and see how that goes. So in the meantime, we're now going to go back to this other chart. Now, in this chart, I always use something called psychological levels that are marked out there. So I won't focus on the more recent ones. What are most recent are zone that price offered us, which is this. So as you can see, last week, price did come and take these buys off that 3,900 level, and it has been pushing to the upside. Later came above and below the 4,000, so 3,900, now it's a 4,000 level, right? And then came back to give us retracement after closing above this bearish candle here. So the current move we are in, the origin of that current move is this demand level here. It was able to push price back above the 4,000 mark. So what we'd like to watch out for here, before I go to the 1 hour time frame, I'm going to just want to draw this here like this, is that we want to see if price can take out these highs and probably push towards the 4,100 mark. The other thing you'd want to watch out for, so look at this, is going to be the supply zone. Let me get a rectangle tool. Is that supply zone? So definitely a push above that supply zone would mean price will now give us some opportunities above this area here, because it's at the 4,050 level, right? It's where exactly that supply zone is, and these are above about 500 pips. So you can fail to get some opportunities in case price breaks above that supply zone. So long as prices are in between these two zones, I would want to just stay out of the market and see what direction price is going to take up. It's always easier to take up a continuation than anticipating some kind of a reversal on the market to happen, because sometimes it just never will happen. It just never will happen in some cases, right? So it's something we want to watch out for. When I go to my 1 hour time frame, now in the 1 hour time frame, now we do have some purple lines here, right? We have the 4,050 mark and on the 3,950 mark. So right above the 4,000 mark, we have a demand level there. We have this demand level that we would love price to come back into before it now pushes to the upside. So of course, I push above the upside, above a push to the upside, sorry, would want price to come and take out this trend line. And at the same time, that one nice. And at the same time, break above this resistance. Then you can have that whole range to the upside of about 502 pips, where you can want to capitalize on and take up some bit of trading opportunities. The analysis I'll be looking at as far as ZAO USD or gold is concerned. So I'll be watching my levels there. Yeah. So above the 4,000 level, we want to target the 4,050 level here. So I have marked this demand level. It's an area you can look up for about 5-15 minute confirmations to see if price can push us to the 4,050 or above the 4,050. So of course I push below this area here, basically the 3,950. So that I would have wanted to talk about. But then when I look low over here, I still have a breakout above here, which means that this zone here still has potential of holding price. So you want to rather target the areas around the 3,900 mark, but that's in case this area doesn't hold price. It's not the best possible structure, but it does have some kind of a significance based off the momentum that price used to come and give us a breakout here. So that's as far as gold is concerned. So I'm gonna get your questions towards the end of the session, and to the pairs you're sending in towards the end of the session. Then we shall see what they are looking like today. So this as far as gold is concerned. So last week, I believe we did have a nice analysis on the S&P 500. Let me just look for it around here. So this was the outlook we had on the S&P 500 last week. And I remember mentioning that price wanted to breakout below this red candle here. Then a push back to the supply level and probably a push to the downside. And the ultimate goal was just seeing if price can try to fill up more of this gap, of which it came back and did. Because when we looked at this last time, it was just slightly above the 50 mark in terms of 50% of the supply or the demand level as well. So right now, we want to see if this push from this gap here can take out these highs. If it takes out these highs, of course, we shall just continue pushing the S&P 500 to the upside, definitely. It has been gaining quite wildly in the past few weeks. We have seen it peak at about 6,900 as well. So we'd like to see if it can break above the supply zone or break below the demand level and push us lower into this zone. So I'd like to refine this zone here to this particular demand over there. So I push to the downside, closure below this, we target this. I push to the upside, above, you look for buying opportunities to probably push the SPX to new highs as it is. So let's look a bit at JPAUD as well. Sorry. So coming in onto this on that monthly time frame, we do see that price did give us a break to the upside, a push, a long wick, then a long wick rejection. So usually these rejections, as I was mentioning earlier, they carry a lot of liquidity, a lot of sellers, and that's why market tends to go for deep retracements when you have this kind of rejections or pushes to the downside as well. So this is something we want to pay attention to. We start even at the previous month's candle, had this big push to the upside, then later on it overturned the whole move, coming and closing below the previous monthly bearish candle. So even if price in a bullish zone right now as we speak, you then want to take a lot of risks within this zone here in terms of buying scenarios, though the pair has been bullish. Why we wouldn't do that is because of the momentum price is using to come back into this zone. So coming down to the daily time frame, we can look at and refine this whole demand zone to this area here. And then from the upside, we can see what price is trying to do. We had this aggressive push to the downside, giving us a breakout from here. Now, based on the aggression of the move to the downside, sometimes we tend to see price coming back to retest this breakout area before it continues lower. And then in terms of condition-based bias, we can look at where price currently is exactly, and see that price has tried to form some small arbitrage or consolidation around that zone there, right? There's like a small consolidation around that particular zone. So once again, we'd want to see the structure either break above, target the supply zone above, or break below and target the area that is right below it to look for buying opportunities or to pick up some liquidity for the buyers probably to push GPAD to the upside. That I don't think is highly, very, very likely for now. The Australian dollar has been looking a bit strong ever since the announcement of the US Australia deal. It reinforced the economy and their currency pair as well. So this is what we want to watch out for on the S&P on the JPAUD as well, and see if there can be some market opportunities coming up. In the meantime, before I go into the next pair, I would like to remind you guys about the signal center, right? So the signal center is basically a signal tool that you can always access on your FXPesa or equity trading account. Still within that same section, while we're getting the market news updates, you can always see their signal center, and there's a download link there. You can download it, install it, and it will come automatically to your MT5. Now it has trade ideas all through the day. Some they'll give you a duration of period for which you should wait for it to come in. They usually come in the form of stop orders or pending orders, and you can always take advantage of them. And when you have an MT5 account, it's very, very easy because you can also just place the trades from here, see how much you want to risk on your trade. So you can have your like a 0.5. Then you can, of course, a pending order here. Then you can just go ahead and press place, right? Of course, you must enable algo trading before you do any of this. So this is a signal center. It's an interesting tool that you can always use to pick up some few trade ideas. And of course, it gives very nice signals. You can see we have one that's running live on Euro CHF. And of course, you'll be able to get a trading view chart as well, as you can see with your trade ID and your entry area and your stop loss zone as well. So now we can move in a bit to let's look at sorry guys, a bit chilly here. So from here we can look into the USDJPY, and of late we have been seeing the dollar, of course, showing all its might and all its strength, are going into the new month, and you can see most of these pairs that are related to the dollar are showing you the dollar strength by moving in its particular direction. For USDJPY, it's the upside. So you can realize that with a monthly price did give us a breakout of an old monthly structure, and then it was very aggressive. Going to the 4-hour time frame, so as you can see, this pair as well had a gap up to a gap up from this area here. That was when they posed for the Japanese Prime Minister Takaichi came out and they were looking very positive for her. Or they were leaning towards her winning the Prime Ministry of Japan. For now, we have this demand level here on the daily time frame that price did form. Gave us an aggressive buy to the upside, and currently is in a consolidation, as you can see. Usually, I believe these areas price forms are, think people call them wedges. They put a trade or candlestick patterns. They call these are probably wedges. Some people call them, I think, slant, pennant or something like that. So I'm not really very good with trading candlesticks, but I read candlesticks. So this is the pennant pattern. Price is forming some kind of triangle, but the momentum is bullish. So you love to see this push to the upside and then continue to the upside. But then in case scenarios where a price fails to get enough liquidity to break above, we'll always tend to see it come back lower into. We'll always see come back lower into these demand levels here before it can now continue that push to the upside predominantly, or probably to continue showing you the dollar strength as well. So right now it's a no-go zone. You're waiting for price to decide what decision is going from out of that pennant or that wedge. I believe that's the word. I'm still trying to figure it out, but basically I believe that is it, right? So yeah, in the meantime, I can be going through some of your questions as so this is Bitcoin. And coming in from the monthly, we have been seeing these strong bears to the downside. So Boyaz Oyaro says, make arrangements on Euro USD. We just did that in a bit. I think that got answered. We did speak about Euro USD, so you can always as well rewatch during the day and continue from there. The market scared us. Why? What happened? Why did the market scare you? I don't think I've seen anything scary in the markets yet of late. It's just pretty much people not following risk management, over leveraging. I think one of the biggest killers that we have lately is the idea of over leveraging, right? Because on the internet you get exposed to all kinds of things. Someone wakes up and tells you a small lot size won't change your life, but you need to ask yourself certain questions. How good are you with the markets before you even think of that? How good is your capital? How good is your cash flow? So in the market scare, usually it's just that, and sometimes just looking at currency pairs that are not where they're supposed to be, but you want to force a trade. If you wake up in the morning and you have a small account, a $10 account, $20 account, because I noticed that the majority of funds that people that are coming into the markets are putting in for now. When you have those small accounts, of course, gold will give a lot of money. Of course, Bitcoin is volatile. But do you think your account can survive when you take a few number of losses on that account? So it's always about safeguarding your capital. If you wake up today and you're seeing a lot of news events on a currency pair, stay out of it. Feel free. Don't force yourself, right? Don't force yourself simply because you've seen a Lambo on TikTok or on YouTube or something like that. So I believe that's one of the reasons why people get scared by the markets personally. But other than that, the market cannot be that scary. You just need to reposition yourself, readjust your mindset, and get back to the market. I believe that's the one technique you can always do. Manage your psychology from what you see and understand your personal advantages before you get into the market. So this is a BTC USD. So that's what I can tell you, world boss. You're a whole world boss, but the market is scaring you. In Luganda, we start take a kanga. I don't know if you're from Uganda, Tanzania, or Kenya, but in Luganda, that's how we say it. Kutete kaina kukanga, a full world boss, Ridge Wambui, BTC USD. All right, so let's break down BTC USD as you can see here. So BTC has been having these bears ever since the market crash we had about 3 weeks ago. That liquidation on Bitcoin, and it's on a daily time frame as you can see. So right now the momentum is bearish, and one thing you never want to do is to fight the momentum. So right now, what do we see as our draws on liquidity? So right now, as my draws on liquidity, I'm able to see these lows here that can act as possible targets. So I want to know that Bitcoin is most likely going to take out either this or this low. There is even one right below it, right? There is even one right below this low here, as you can see. There is even one right below this area here. So this can be possible draws on liquidity that Bitcoin can push to based off the momentum we are seeing at the moment, because the momentum is bearish. You don't want to fight the momentum. So if these are daily levels to the downside that price may most likely be targeting, that means I can capitalize on low time frame areas or conditions to look for these bears. So as you can see, price did give us a breakout from here within this push to the downside in a 4-hour time frame. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then now price came into this with a lot of aggression, coming into the supply zone. But then as it was coming down, buyers came into, but then they kept losing momentum. So on a 4-hour time frame, I can see the momentum is still very bearish. Price has given us a breakout of this internal structure here with a very strong bearish candle. We still don't tend to see any zone on the 4-hour that can be able to capitalize on. So we can refine a bit lower, because the idea is that if I'm going to play with the momentum, I need price to give me a retracement to a good area of interest where I can probably take within some selling opportunities. So I have a zone here that I'm watching out for. That's first of all, it's going to be this zone. Let me just mark it out with that rectangle tool. This zone here, this breakout zone. It's one zone I really want to pay much attention to in case price happens to retrace all the way to this area here, as we can see. So right now, price has reached the obstacle area. That's a demand level. That's this over here, and it's giving us some reactions. So what I would love to see is the reactions either come to this supply level here. So for Bitcoin, I'm going to just have 3 zones because of the nature of its volatility. I'm going to have this zone. I'm going to have this breakout zone. These are zones I'm going to just be watching. We watch them when price gets there, we drop down lower. These are 30-minute zones. That means I can have the 5-minute and the 3-minute to my advantage when price gets into these zones. So now you can see that price here try to push lower to create a new lower low on this area, but then price just did a sweep. Now with a sweep, expect usually deep retracements, or sometimes even the market can change a bit of direction. So if the market now breaks above this, gives me a retracement, pushes above, breaks above this, then I'll be looking at these extreme zones here. What levels do I have there? So I'm going to first look at this zone here, my QM level. Price already did respect the QM level. That leaves me with just a supply level around there. Leaves me with a supply level around there. But I'm going to first pay attention to the supply zone nearest to the breakout, and that will be this. Why this one? Because price had the supply level then broke out of here. So this is the best possible selling area as well. So of course, if price breaks above this most recent here, this most recent supply, if price breaks above, I can expect a retracement, a push into this area where I can now look for a bearish momentum to come and take out this lows we had seen earlier on. That's in my perspective what I'm looking at right now. If price happens to break above this, we are seeing the Bitcoin giving us some bit of push to the upside. Alternatively, price can just use this to go lower. But based on the momentum I'm seeing coming in right now, I don't think price will most definitely use this, or most likely use this, but can probably give us a push all the way up into this area here. Can have a breakout, a retest, a push all the way to the supply level. But price can later on continue pushing to the downside. Crypto sell-off seems to be in a continuation. Yeah, pretty much like that. The momentum is still very bearish. Waiting to make probably a major announcement can boost crypto. Probably if the Senate now starts making the discussions of adding BTC to the laws they had passed on crypto a few months ago, then we can anticipate the crypto sell-off to end. But for now, we are pretty much relying a lot on the momentum we are seeing in coming in. We are seeing a lot of sellers coming into the pair, and it's something you want to ride the wave. We don't fight them. You don't fight the Fed. You don't fight the market makers. So yeah, basically that's what I'm looking at in regards to this GPJPY. I think we did look at GPJPY earlier on. Yeah, I remember we looked at GPJPY earlier on. Let me just see. Did you look at GPJPY? We looked at USDJPY, right? So here's some analysis we have had, I think, from last week. Yeah, we looked at USDJPY and GPJPY. We looked at USDJPY. So let's look at GPJPY. So we had this. Let me come in from a higher time frame and we look at what this has. So price failed to come and break out of these highs over here. We expected a push lower. Now we can just try to gauge how low this push can go. With USDJPY, we saw that from the gap up, it was able to pick up momentum to go higher. But today, as we have seen that the pound itself is slightly weak, right? So we can anticipate a deeper retracement on this pair here. So we saw that price gave us this push, the downside anticipated. And how far can price push down? I think I was looking more at this candlestick wick here. We have some bit of long wick rejection. I'm still going to rely on this area here as my zone to watch out for. So this area I'm going to first look for buying opportunities from on low time frames. And in case it doesn't hold price, is when I'll look at now price, filling in that gap on GPJPY, this gap that is still there. But for now, I'm going to be focusing more on this area here. If I go to a 30-minute, I can probably be able to refine it or pick up a nice demand zone within it. So here we go. We have a nice demand level here. We have this nice demand level. For the guys that have been in for some of our classes or for my classes, you know that this is a type 1 demand level. It's a nice hyperbolic demand level. The one which was here, price tried to consume it. Right now, we are seeing that push to the downside. Now, based off conditional bias, just have this. Just first have this off and this. Pushed lower. So when I come down to look at conditional bias, we still do have an intraday area where you can get some bullish reactions. I just don't want to rely on it a lot because they don't align with any other high time frame area. For example, in the 4-hour, I just have a low here. That price may most likely look to take out. It's why I don't want to rely on this area here. But it's also an area you can watch out for. It can give you a small, nice 1 to 2, 1 to 3, unless the conditions change. But this is the area you'd want to watch out for. And probably to get a whole full bullish bias would want probably this area to push us and break above that trend line. That's if you decide to use this area here. Pretty much will be probably sometime in the New York session or even tomorrow mornings at trading session as well. So GPJPY, I have this zone, then I have this demand level here where I can look to buy or take my buys from. So of course I'll want to fancy a 5-minute or a 3-minute confirmation within one of these two zones if I'm going to turn bullish. So if price violates or fails to give us bullish confirmations within both the zones, then we can now look at price going down to fill in that imbalance we have on the daily time frame with GPJPY. So this is my GPJPY analysis and what I'm looking out for. So you can also be able to reduce some analysis on that and see how best it will look out for you. So gold, we did look at gold already. So I'm not going to really go back much into gold. We did look at the gold outlook earlier on. So you can feel free to rewatch the other session, the session still. This demand level is still holding price pretty much. We want this to push us probably about the 450 zone. Of course, you want fancy a lot of time frame confirmation. 5-3 minutes always good as long as price in the zone. Did we speak of conditional bias on gold? It was, I think, pretty much the trend line and a break above this zone here to push us higher, but pretty much a break above this. Then you can look for continuations around that area because you can see price has just tapped the breakout area. It's trying to push above this. Then you can have a very nice range to look for opportunities from. About 258 pips. So you can't fail to get in a bit of 20, 30, 40 pips within that particular area as well. So that's pretty much what I'm looking at on gold. The full analysis is still in the video will be up on YouTube. It's never going anywhere. So you can be able to go back and rewatch that in regards to gold. That's for Donald Makumi. There are two biases. We have the structure and then structural bias and the conditional bias as well. You guys in NZD USD. Let's look at NZD USD. I think I have it here somewhere. NZD USD. Here we go. So pretty much the bias is going to be the same like with Euro USD and GP USD. The beauty with pairs like NZD USD is because of the structures are very clean, right? Lower low, lower high, lower low, lower high. So the target is still to come out and take out these previous lows. When I go down to a 4-hour time frame, I can see price did give me a breakout to the downside, give me a whole supply zone there. And right now it's trying to give us some bearish momentum to break out of this area here. So we had this high extreme level that would have been the best level for price to sell from, but price didn't quite get to it. So right now we are going to have a bit of conditional bias. We shall keep that structural bias in case price buys in a bit to this area here. But then based off the structural bias, right now you're going to realize price had created some kind of bullish engulfing, giving us this card demand zone here. So the conditional bias would be for price to break below this, give us a retracement into a nice supply zone on a 30-minute time frame, and then consequently continue to the downside. So coming in a 30-minute time frame, I don't really have anything of much significance here, but what I'm going to have is this supply level here. Price hasn't gotten to it yet, but it's a nice area to look for selling opportunities. It's a 30-minute time frame, so we shall have this supply level, then we shall have this low over here. So we close below this low, we want to push price, take out these other lows here. Some people may call it sell side liquidity, trendline liquidity, relatively equal liquidity. Well and good, but a closure below this, one price to continue taking out these areas and ultimately taking out the previous lows on the left hand side. So that's what I'm looking at on NZD USD. Conditional price breaks, closes below this, slight retracement, probably a 5-minute, 3-minute, get a confirmation and continue pushing price to the downside, take out these lows and take out the older lows on this pair as well. So this is what I'm looking at in terms of NZD USD. The bias is still bearish and the structures are those that I'll be watching as I've just marked them out as well. So that's in regards to African Souls question. I hope you could have a clear picture on that as well. So silver as well. Silver. Let's get silver. For very many times, we always know gold as being a safe haven asset. Yes, a safe haven asset, but then there are what they call commodity pairs. Now, commodity pairs are some of the pairs investors will look into to put their money in times of uncertainties, and silver is one of those most amazing commodity pairs. So silver is a commodity pair because it's largely used in the steel and manufacturing industry. That means it's a necessity, right? It's a necessity. So looking at my daily time frame on silver, it's already looking like it's hedging higher. And right now it has this resistance zone here. Now, if you watch carefully, we have a similar resistance on gold. A similar one on gold, though for gold, it's still pretty much down compared to it. But silver has already retested it about 2 times. And now it's giving us some bit of bullish momentum. See if it can go above. So let's look at the structures being formed on lower time frames. So as of now, we really want to see a break above this. We are going to take a buy opportunity. We a break above this zone here. We can refine it since price had come back to retest most of it. We can refine it all the way there. We have this retest I've spoken about. Then in case we are to go to bearish, I would really prefer price to first give me a whole bearish structure, which is this. A whole bearish structure. So you can supplement that bearish structure in a 30-minute time frame. For guys that want to lean a lot into intraday opportunities, you can now set price is trying to come and close below this low here. Why is this low? Because this low is responsible for the highest point formed within this internal structure here. So within the internal structure, price formed a lower high, higher low, higher high, higher low, higher high, higher low, higher high, right? So for me to look for bearish opportunities within this to target these lows, I will need this to close, a candlestick to close. May not be the next. In case that doesn't happen, I won't be looking for those bearish opportunities. I'll stick to the bulls and see if price can take out this zone to the upside. So that's what I would be wanting to look at in terms of silver. So I would like to look at in terms of silver. So yeah, pretty much that's it for today's session. And wish you guys the best. Don't forget, if you know a person or two who may be interested in our free classes we offer, both online and physical. Physical for Uganda for now, because Tanzania we are still trying to stabilize after the elections over there. I wish them the best. For Uganda, we do have the physical classes here at our offices, Lumumba Avenue, Rumi Building. If you can come through, well and good, come through with a friend, 2, 3, 4, 5, 10. We do not mind how many you bring. Online classes, we have the 11 a.m. class, intermediate class. Then we have the 8 p.m. beginner session. You have a few beginners out there. You can always refer them. The link is in the description. And if you're looking to trade, look no further than creating your FXPesa account today with a link in the description and take advantage of that 100% deposit bonus, the Karibu bonus as well. So until next time, I want to wish you guys a peepful week, an amazing as well. Have a beautiful day, guys.